Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, and not only is it Hump Day, it is also Fed Day. So we do got a couple economic news releases to go over today, and then we'll get to the FOMC statement. Now, so far this morning we had ADP employment for the month of October. We had 145,000 reported new jobs created back in September, and they figured for October it would increase up to 150. And it actually dropped down, so missed forecast by quite a bit, down to 130. We also have the consumer price index, which is the CPI, or the consumer priced, basically inflation numbers for the consumers for the month of September. So August they had a 0.1% growth in the inflation. Forecast was calling for 0.2, and it came in. So on the consumer prices basically went up a little bit in the month of September. Now, when you strip out food and energy, that gives us the core CPI. And this is typically what the Fed will look at. We had a 0.1% growth for the month of, again, August. Again, the forecast was for 0.2, and it came in at 1.1. So we're still really low in terms of where we are for inflation numbers, especially with all the purchases that the government's been utilizing, or the Fed has been with the mortgage-backed securities. Typically, that will create inflationary and get the economy moving, but we quite haven't seen that yet. And of course, at 11:15 Pacific Standard Time today, we had the Fed Chairman Bernanke give a statement talking about it. So here's what basically was said. There wasn't a whole lot of changes from the last one. They did mention that the slowdown in the housing market. They still left in the language that the economy is still slightly in a moderate pace. But they've also had some mixture of combinations where they figure the tapering, the economy is not strong enough or to sustain itself without the tapering. So a lot of the investors, of course, are a little bit perplexed by these mixed comments or these mixed statements. So they're a little bit confused. So as a result, you're going to see the stock market is currently down right now. And then now we'll jump over to the bond market. And as we were up earlier in the day, we even hit the 103 mark. We pulled back quite a bit. We actually started the day up 18 basis points. As you can see with the ceiling, we were touching the top point and went up another approximately 15 basis points, touched the 103 mark, and now we're on the verge of actually closing at a negative 30 for the day and closing below where we left off yesterday at the 102.56 level versus where we are at 102.69. So this morning we started off really nicely, had improvement in the rates, and then so far this afternoon, now our pricing is worse than where we left off yesterday. Again, a lot of this is confusion by the investors, by the statements by the Fed. So let them digest this a little bit. We could have a bounce back tomorrow. Basically, we could get a little bit better pricing in terms of the bond market, primarily because, as the Fed was saying, the market really is not that strong. We saw the ADP numbers come out, 130. We've been seeing the people applying for unemployment go up from where we've been. We'll have the Bureau of Labor Statistics coming out with their numbers on Friday. So again, we'll have some very volatile information coming out, but those were things kind of gave us a better gauge as where the economy is really at. Ones that were released last week, of course, were for the month of October that were coming out. So, or for the month of September, I believe it was. So, anyways, sorry for the confusion there, and hope you guys have a wonderful day, and stay tuned tomorrow for another update. Have a great day. Thanks again for watching.